Good afternoon and welcome back from lunch. Thank you all for joining us. My name is Eric Delon. I am an assembly member from the great state of New York, and I will be moderating your general session this afternoon. We have a great panel of speakers here with us today to discuss a very timely and interesting topic, the use and impact of artificial intelligence in the insurance marketplace. AI is transforming various aspects of the insurance industry, including product development, marketing, sales, underwriting and pricing, claim management, as well as fraud detection. But while the use of AI in insurance has tremendous promise, there are, of course, significant concerns we have to be aware of as policymakers to ensure that consumers are protected. As many of you know, states have begun to take action and have introduced several different types of laws surrounding AI and insurance. And in beginning on page 109 in your binders, there are a few different types of laws that have either been passed or introduced in California, in my home state of New York, as well as Florida. And they can be found on the app and the website as well. I'm really looking forward to the discussion today, and it would be a great springboard towards NCOIL continuing work in this area throughout this year. Specifically, it's likely that our multi-line issues committee will further discuss this issue and potentially develop some model policy starting at our next meeting in July. Joining us today to discuss these issues are Dr. Kartik Sakdeval from the Life Insurance Agency Management Association. He'll be the first to testify, followed by Wayne Turner of the National Health Law Program, and then Lizzie Klarkowski from the National Association of Mutual Insurance Companies. And they'll be followed by two others, but I think at this point, in an effort to catch up with our schedule, we'll allow Dr. Sakdeval to begin his testimony. Welcome, and we're pleased to, or encouraged to hear what you have to say today.
Well, thank you. Thank you so much for having me. It's a privilege to be here with a distinguished panel. As we talk about the use of artificial intelligence within life annuities and group and worksite benefits, just a quick introduction for LIMRA and LOMA. LIMRA and LOMA is primarily a research benchmarking organization by the industry for the industry. We also provide training as well as educational programs and bring the industry together to pursue common topics of interest. LIMRA has been headquartered in Windsor, Connecticut. We've been around for over 100 years. And LOMA is out of Atlanta, Georgia. The two associations merged back in 2007, effectively forming the world's largest and oldest nonprofit trade association. And we are non-advocacy, so the work that we do is purely focused on the industry and our members. So with that, let me just start off with some of the key facts that we have in AI. To quote from Simon Sinek, I think it's helpful for us, not to get enraptured with just the technology, right? And focus on why we do what we do, and AI's role in helping our fellow citizens. This is out of LIMRA data. LIMRA Life Happens. We had a barometer study conducted in 2024. 102 million Americans are uninsured or underinsured, right? There is a significant financial gap when you think about life insurance, primarily because life insurance is one of the only facets of financial services where you are procuring a product for the benefit of your family, right? For somebody else. They are the beneficiaries of it. 102 million Americans are uninsured and underinsured, and in my opinion, as a consumer of life insurance as well, that number for the richest country in the history of our planet is pretty unconscionable, right? We can do a lot more to protect our fellow Americans with financial protection. 72% of millennials and Gen Z overestimate the cost of a basic term life policy, and 50% of these millennials and Gen Z overestimate this cost by 3x, right? I mean, these are real statistics for us to be able to, there's an opportunity for us to be able to educate millennials and Gen Z, just not on the criticality of life insurance and annuities, but also that it is an affordable option as part of a complete financial picture. Just keeping on that bandwagon, I think it's important for us to understand our industry has done a really good job over the past several years focusing on the millennials, right? The millennial generation, in being able to provide them with financial protection. But I draw your attention to Gen Z, right? So just by virtue of simple math, Gen Z, by the end of this decade, they're going to be between 18 and 33, right? So they're going to be a core part of our customer block. They are going to be a core part of our employee base as well. And what's interesting about Gen Z is that this is a cohort that has had access to smartphones since elementary school, right? They think very differently. They engage very differently. They want to communicate very differently with their life insurance agent or their financial advisor. So how do we bring technology to bear to be able to connect with these folks the way they want to be connected, right? Not how we have been historically doing business. Millennials are also a pretty interesting block. I showed the statistics earlier. For those who say I'm a child of the 80s, I said, sir, you're 40 years old, right? But from a Gen Z point of view, I think that's where our attention should be as an industry in order to protect more American lives and families. And like I mentioned, in our industry, life insurance, annuities, group worksite benefits, I've had the privilege to serve in my role as Global Chief Information Officer for LIMRA and LUMA for 8 years now. To me, what really draws me to this industry is that we're not manufacturing widgets in our industry, right? We're helping, regardless of where you serve. You could be in underwriting, you could be in finance, you could be an agent, an advisor, IT, like me. Each and every one of us are contributing to helping our fellow citizens lead sound financial protected lives. And I think it's extremely empowering for me. It's extremely empowering for my colleagues at LIMRA and LOMA and the industry that we serve. So when I say start with why, if there's a technology that we can bring to bear to be able to streamline our own operations, to be able to increase operational efficiencies, to boost our productivity, and translate that into protecting more consumers, I think that is a win for us, that is a win for our fellow Americans, and that is a win for the industry. So with that in light, AI is not new per se. AI has been around for a while. My friend Lindsay is going to talk about that in a little bit. But AI has been around for a while, but the adoption of AI in our industry, especially in life annuities and group and worksite benefits, has been a relatively recent phenomenon, right? And it continues to mature as we go through. AI itself is not new, but the adoption of AI writ large is new, and a lot of those things changed in 2023, right? With ChatGPT and with generative AI. ChatGPT is the fastest growing app in human history, right? It reached 1 million users in 5 days. It's reached 100 million users in 2 months. Just to draw a comparison, it took Netflix 10 years and Facebook 4.5 years to get that same subscription base, right? So obviously ChatGPT consumed hearts and minds, and in my opinion, just one guy's view of why is, number one, it's free, right? So if it's free, it's for me. Number two, it's quite accessible. ChatGPT is. It allows you to interact with it, whether you're using your computer, whether you're using your mobile device, and it's easy to use, right? It's almost like Googling for responses, but you get an AI assistant bespoke to you. So in light of that, in light of the growth of generative AI within our industry, and life annuities, group worksite benefits are represented constituencies with LIMRA and LOMA, our implementations are decidedly internally focused, right? So when you have implementations that are new, right, like the genesis of the internet in the late 90s, or even email, right, in the mid-90s. I mean, think about it. Each and every one of us here, it's been less than 30 years since we sent or received our first emails. 30 years, right? I mean, imagine doing anything without email today, right? So obviously we didn't have a playbook for email. We did not have a playbook for the rise of the internet. What we're trying to do is establish best practices to equip our organizations to structurally be able to find success with their AI program. So like we do with LIMRA and LOMA, we brought the industry together by the industry for the industry. Proud to announce we have over 100 business and technology executives from over 55 of our member companies, and these are insurance carriers in life annuities and group and worksite benefits. The photo here on the left on your screens is Kelly Coomer. She's the Senior Vice President and Chief Information Officer of Sammons Financial, and she has been serving and doing a yeoman's job of serving as committee chair since inception of January of last year, January 2024. We operated in 2 phases. Phase 1 last year was a current state assessment, finger on the pulse of where life insurance industry was with respect to adoption of AI at that point in time. Primarily focused on generative AI, but we took the opportunity to do research into other facets of artificial intelligence within the industry as well. And phase two, which I'll talk about in a second, it's going to be the crux of my conversation today, is focused on industry best practices, right? How do we establish the structures of people, process, and technology for organizations to find success with their AI implementations? We operate across two verticals. One of them is business value enablement, a nicer word of saying use cases, right? What are the use cases out in the industry? What are the use cases finding value? Because those things can be mutually exclusive. And then all things governance, as I mentioned, the combination of people, process, and technology to structurally enable enterprises to find success with their AI programs. So I'm going to talk about that in a second. Just some key takeaways from last year as we've navigated the AI waters with this AI industry group. Number one is the centralization of AI programs. So again, my view of the world, what I have found, AI in our firms had been relegated to a line item budget within a particular department, right? Machine learning, to be able to do analytics, predictive analytics and predictive modeling. What generative AI, the explosion of ChatGPT has done, it's allowed CIOs to have, I wouldn't say a 360-degree perspective, but at least a 320-degree perspective of all AI programs within an organization, which has been remarkable, primarily because you can achieve economies of scope and economies of scale in that manner. Number two is best practices, and again, one of the things that we found is, it's important for us to co-create these best practices by the industry, for the industry, primarily because it doesn't make sense for Acme Insurance Company to develop, AI use policies for their own firm, and then another insurance company to do the same, right? So what we're trying to do is mutualize the problem solving across our industry. Number three, experimentation and innovation. It's been interesting to see. Most of our AI programs in our industry have been internally focused, right? As I mentioned earlier, in establishment of internal ChatGPT engines or Microsoft Copilot or any of these other internal AI tools. And it's intended to allow your employees, a firm's employees, to be able to get access to information quicker, right? To be able to find information within their own institutional corporate knowledge quicker. There is a good amount of innovation happening within these firms as well, and I'm going to talk about that in a second as well. And what's interesting about innovation and experimentation, right? With insurance companies, we've been pretty shy about steering away from technology initiatives and technology investments because we don't like failure. No one likes to fail with a particular technology program. But it's been good to see the investments and experimentation and the little bit of flexibility to be able to have the wherewithal to experiment with internal AI for a bit. Number four, education and AI literacy is going to continue to be important. I think it's quite vital for us to educate our employees on AI and how do you use the tools that your organization is providing for you, especially the internal type engines, right? And it's important because these are tools available for our employees, but if they don't know the basics of AI, if they don't understand how to use the tools, it's just another tool in the tool shed that will not be utilized, right? So firms are looking at elevating the level of AI education that they have within their organizations as well. And last but not least, one of the key things that we have found and we have underscored, right? And I fundamentally believe this. I have a doctorate in computer science and I had focused on AI, but I do fundamentally believe within our industry verticals, life, annuities, group worksite benefits, AI is not coming for anybody's job, right? It's not coming for people's jobs. It is a human-to-human industry, right? It is a person-to-person industry where you establish a relationship of trust with your financial advisor. What we're looking to do from an AI perspective, internal to the industry, is use it as an engine, use it as a tool to augment our jobs, right? So if I have 10%, 20% capacity back in my day, I can invest that into Loma education programs, elevate my domain knowledge of life insurance to be able to be a better steward and a better student of the game, right? So most organizations with their AI programs within our verticals are looking at AI to augment their tasks and not necessarily from a perspective of we're going to hire less people. We might hire a different type of people, but it's not a reduction play, okay? right? In the interest of time, I can move on. The thing that we've been talking to the industry about, me personally, the three things that leaders need to know across the industry is, number one, educate, employ, and enable, right? So it is absolutely vital for us to educate our employees on the basic fundamentals of artificial intelligence. Again, how do you use these tools to get the most out of them? I know some groups, some organizations put their new employees through generative AI training, right? So basically, how do you write a good question to get the optimal response from your internal artificial intelligence system? Number two is employ. I think we have a huge opportunity. Our industry, in my opinion, again, one guy's view of the world, life insurance is about 3 to 5 years behind property and casualty in terms of technology maturity, and property and casualty is probably a little bit behind retail banking in terms of technology maturity. But I think it's important for us to use artificial intelligence internally to our organizations as an opportunity to rethink the value chain, right? Rethink the value chain. Business processes would likely have to change. If you think about insurance companies, they've been operating exactly the same way. You strip away all of the technology that we've built, insurance companies have generally been operating the same way for the past 100, 200 years, right? Since 200 years ago, James Monroe was 6th president of these United States. You know, if you think about it, going back 200 years, the processes look very thematically similar. This is an opportunity for us to reimagine that, the value chain. And last but not least, how do we leverage artificial intelligence to enable more automated processes so that we can deliver quicker, better value to our customers? The one thing I do stress upon to organizations, especially industry leaders, is this focus on change. Everybody likes change, but no one likes to change, especially when you are implementing AI programs internally across your value chain. Jobs might look a little bit different, right? And as soon as you talk about difference, people are like, oh, don't move my cheese. Debris is going to be everywhere. That's my one dad joke for the day, by the way. But how do you effectuate that change curve within your organizations? Because I think that's going to be the difference maker in your internal AI implementations. So I'm going to touch upon this briefly. Again, looking internally to augment our own jobs, augment our own tasks. There are use cases across the value chain, right? Marketing, customer education, acquisition, operational efficiency by virtue of automation and reduction of human errors. Customer service and fraud, and definitely information technology as well. So my team internally, IT at Limer & Loma, we have a tool called GitHub Copilot, and I know for most of you that doesn't mean anything, but there are software engineers deploying GitHub Copilot are seeing 10 to 15% efficiency gain, right? They're writing better code faster, so we can deliver value quicker. I do want to point out customer service for a second. I don't know if you folks have been to an insurance call center or a help desk anytime in the recent past, but a call center rep is an interesting job. It's an interesting job, right? Because you are surrounded by 7 monitors with 20 different systems that probably don't integrate with each other. You're expected to provide fast food level turnaround times with white glove service. And oh, by the way, you are also the face of your company's brand to your customer, right? That's a lot to ask somebody. Add on to that, you're also supposed to be on the front lines to intercept and detect insurance fraud, right? That's a pretty heavy load to bear. There are companies with extremely high attrition rates in their call centers and their customer service centers, right? Think about the contingent of emotion, especially in the life insurance industry. Wayne, no one's going to call a life insurance call center and say, hey, Wayne, how's your day going, right? They're calling you with a very specific problem in a very dire time in their family, right? So anything we can do from an AI perspective to integrate these back office systems so they have one pane of glass to be able to provide value quicker, that is the promise and potential of AI being leveraged internally within organizations. Okay, so Lindsay, I did leave this up here. I thought I had deleted it, but this is basically the genesis of AI. Lindsay's going to talk about what AI is and demystify that a little bit. But again, the point I was trying to make here is that AI in our society is not new, right? It dates back to the 1950s. It was actually coined at Dartmouth, from my home state of New Hampshire. I don't know if anybody else from New Hampshire is in here, but it was coined at Dartmouth. And the oxygen in the room right now is all on the third row from the top, which is all about generative AI, right? Large language models, ChatGPT, and again, with life annuities, most of these implementations are internally focused. How do we make sure that we do something meaningful with the treasure trove of knowledge that we have? 2025 into 2026, the focus is going to shift to this concept of AI agents and agentic AI. but AI is progressing at such a really good clip that you really don't know. You can't predict what AI innovations are going to come about in the next 2 to 3 years. It's a pretty remarkable thing to bear witness to. Okay, so one of the things that we wanted to do, we felt pretty strongly about with this AI industry group, we don't want our industry professional to spend time Googling for 17 different knowledge articles, try and extrapolate what it means to them, what it means to our industry, and what it means to our members. So we established for our members, our carrier members, a central hub for the knowledge repository, right? So all of the LIMRA research that we've been doing within the industry, our white papers, our surveys, I'll talk about those in a second. Some of the best practices that we are developing are being posted to the central hub, which is the industry's AI knowledge repository. And again, this is primarily focused on life insurance and annuity carriers. Phase 2, which I'm pretty excited about, that we're working on and have been, and in the interest of time, I'm going to move pretty quickly. What we're trying to do is mutualize the problem solving, as I mentioned earlier. It does not make any sense for Wayne to develop some best practices for his firm, Lindsay to do the same, Julia to do the same, and for Peter, right? It's going to be redundant and duplicative. So as being in the nucleus of the industry, we're bringing the industry together to co-create these. What I'm excited by is that these are turnkey best practices. So if you're a smaller organization, a smaller life insurance company, and you don't necessarily have the technology resources built out, you can download and kerplunk these frameworks within your corporations as is, right? And they will work. And I'll talk about what those are in a second. But they're also highly customizable and extensible, so you don't have to stop with what you download. You can make them bespoke and you can make them your own. My ask to our industry has been, if you download something from us and if you make it better and if it's devoid of your corporate secret sauce, contribute it back to us so that the entire industry would benefit.
And Doctor, I'm going to have to ask you to sum up so we have enough time.
Yep, thank you, Eric. So I'm just rounding the corner. These materials are available to you folks, but some of the quick flavor of what we've been working on in terms of best practices, something as simple as AI use policies, right, for your employees and how you successfully can use generative AI in a safe and responsible manner. For the CEOs in the room, we're also building cost-benefit analyses because CEOs always ask their CIOs, what's the cost-benefit analysis and ROI we're going to derive out of these? And it doesn't make sense for corporations to do that redundantly, so we're building those out as well. And then last but not least, we're also developing currently a build versus buy decisioning framework for organizations. Do I build my own artificial intelligence engines or do I procure them from a third-party vendor? So pretty excited to see how this goes.
Okay, thank you, Doctor. And I guess to round out the panel, after Ms. Klarkowski, we'll hear from Peter Kokenberger and Julia McDowell. And to learn more about these speakers, you can view their bios in the program and on the app. And I also urge every one of us to reach out to them afterwards to talk about these important issues. And we'll get right back on schedule. Now, does there need to be a change in the order? I had Mr. Turner next.
No, Lindsay's
it's okay, so Lindsay Klarkowski will be next, and then Mr. Turner can follow.
Mine's the one right in the background there, the NAMIC one with the blue. Yep. Perfect, thank you. My name is Lindsay Klarkowski, and I serve as the Policy Vice President for Data Science, AI, and Cybersecurity Policy at the National Association of Mutual Insurance Companies. And on behalf of myself and on behalf of NAMIC membership, thank you for the opportunity to present on today's panel. So today's general session is focused on AI and insurance and the impact of losing the human element. With that topic in mind, I do want to take a step back because it's important to start with level setting on what AI is. If one only listens to the media today, or one only gets one very small portion or view into what AI actually is, and an understanding of AI, even if high level, like I'm going to dive into here, it's important when understanding the impact of new laws or regulation, or even how to regulate AI in the context of the insurance industry. From there, we'll dive into benefits of AI in the property and casualty industry and the regulatory challenges facing insurers today in the context of AI application. So So AI has certainly been one of the hottest topics in the media and policy-making spheres since the release of ChatGPT in late 2022. But as noted just now, AI has been around much longer than that, since the 1950s to be exact. And that's surprising to a lot of people, given that there's really only recently been this large-scale attention on AI. But there's many more layers and models and applications of AI than just your ChatGPT that has been dominating the conversation. So up on the screen, I have a definition of artificial intelligence from the National Institute of Standards and Technology, and it reads, artificial intelligence is a branch of computer science devoted to developing data processing systems that perform functions normally associated with human intelligence, such as reasoning, learning, and self-improvement. And what I want to point out as very important in this definition is that AI is a field of study. It is not a catch-all term for a singular piece of technology. There are many different models that the field of AI produces and different applications. So as a general matter, that field of AI creates systems and models that provide insights into data, as well as provide or generate new content based on those insights and learnings from data sets. But no matter which model we're talking about, the general function or how AI is built is the same. Once a model is developed, it operates by receiving data input. That model learns from that data input and generates a data output. So the first AI model that we'll take a look at here is one of the more straightforward models and one that's been around for quite some time, that being machine learning models. These models are trained on a set of data and can then make predictions on data that it's not yet seen, and those predictions are the model output. By way of a very simple example, one could develop a machine learning model and train it on sales of ice cream cones in the summer, or data on sales of ice cream cones in the summer. That model could then output predictions on sales of ice cream cones in the fall, or the winter, or the spring, or on data that it's not yet seen. Again, these models have been around for quite some time. They have defined data input, defined training parameters, and defined expected output. So in the grand scheme of things, these are one of the more explainable and transparent models that you see. And again, they have been in use for quite some time. The next model that we'll dive into are deep learning models. And what I'm trying to depict on the screen here is that deep learning models are an extension of machine learning. The difference with deep learning models is that the model itself tries to emulate the way that the human brain functions. If you think about how a human perceives information, different areas of our brain talk to each other when receiving that information to analyze it. Deep learning models try to emulate that through what's called artificial neural networks that talk to each other when they receive the data input. Given those, the existence of those neural networks or those nodes, deep learning models can receive larger amounts of data input and then learn and adapt accordingly with their output. And now on to generative AI. So generative AI is the type of model that has garnered the most attention in recent years due to ChatGPT, because ChatGPT is a form of generative AI model. Using deep learning, generative AI learns patterns in large data sets and can then generate new content based on those learnings. And if you've played around with ChatGPT, that output can take the form of text, it can take the form of a picture, a video, a song, the list goes on. But the differentiator with generative AI is you're not only getting simply data insights, you are getting novel data output based on the patterns that it learns in the large data sets. So if we look at ChatGPT by itself, ChatGPT is trained on vast amounts of data available on the internet. And given that generative AI models don't think in the way that the human brain thinks, they recognize patterns, a lot of the concerns that you hear associated with ChatGPT are hallucinations or output that just doesn't make sense or is completely false, as well as explainability issues. And these concerns have found their way into the policymaking space. But what's happened over the past 2 years is that generative AI has become AI, and those terms have become synonymous with each other in the policymaking sphere, and all of the concerns over ChatGPT have been attributed to all types of AI models. But what I'm hoping you can see here in this brief walkthrough is that there are many different types of AI models with different applications and different risks associated with each. So I'll bring you back to November 2022 because November 2022 and the release of ChatGPT not only kickstarted a lot of regulatory interest in AI, but it also set off that conflation of risk and dangerous misunderstandings that, if left unchecked, will lead to dangerous new laws or regulatory confusion and dual and conflicting standards. In all of this attention, there hasn't really been a general pause to differentiate between model types, as we've just walked through, and what the risks might actually be or not be based on the model that's being employed and the context in which it is being employed. And the insurance regulatory environment has definitely not been immune to this. So there is yet to be discussion over not only different model types, but also the benefits to the industry. And for my purposes, I'll focus on the property casualty industry and how different models might be leveraged. AI at its core is advanced data analytics. The insurance industry is in many ways, it has been and always will be, a data-driven industry. As such, there are many ways in which insurance can benefit from the use of AI, and these are often being overlooked in our policy conversations. We heard earlier from Commissioner Jaworski about the confluence of different pressures that are hitting Florida's property casualty industry. And I'd say that those pressures are being seen kind of across the board in the industry today as the property casualty industry navigates this new era of risk. And in the background, we have this changing consumer mindset. If you think about yourself as a consumer, immediacy, convenience, and personalization are at the core of the modern consumer experience. So AI, how does that fit into here? Well, AI can and already is being used in many ways to address the various pressures that the property casualty industry is facing. AI can be used through mitigation of claims and perils. It can be used to increase precision and risk-based pricing, which leads to affordability and availability benefits, because I know that is a concern that's been talked about throughout the meeting so far. And AI can help address that changing consumer preference and mindset. With the benefit and potential continued benefit from additional AI use cases that come about, one thing standing in the way of a lot of that benefit is the current regulatory environment for the property casualty industry. What I have up on the screen is a current view of AI regulations specific to the insurance industry by state. The blue states are state insurance departments that have adopted the NAIC Model Bulletin, and as we sit here today, there are 24 state insurance departments that have adopted that bulletin in substantively the model form. The dark states are 4 state departments that have taken different approaches to AI regulatory guidance, and then the light gray are state departments that we've not yet seen any action in. But in the states where insurance departments have taken action, in all cases except for Texas, the regulatory guidance includes and introduces novel metrics for judging insurer conduct when AI is in use, like expectations for bias testing out of the NAIC Model Bulletin, or prohibitions on disparate impact like we saw in the New York Circular Letter number 7. Notwithstanding the fact that there are different AI models with different use cases and different benefits that I highlighted very quickly today, if I can impart anything on you all from this presentation, it's that artificial intelligence is a tool. And what's largely missing in the regulatory discussions today is viewing AI through the lens of it being a tool. And because it's a tool, it has underlying use cases that are often already governed by existing tech-neutral law. And there's a very illustrative example that I like to use here. It's if we think about a knife. A knife is a tool that can be used for good. It's a tool that can be used for bad. But there is no foundational law or foundational regulation on knives. Instead, there's existing tool-neutral law that applies to the uses of knives in various contexts. You think about the criminal code, it's illegal to murder somebody. You think about the medical field, there are legal standards in place for surgeries or surgical standards. And in the culinary field, as another example, there are laws on food cleanliness and preparation standards. In all of those cases, those are laws that are not specifically directed at a knife, nor do they specifically name knives. So if we analogize this to insurance and AI and look at just risk-based pricing alone, if AI is used as a tool in risk-based pricing, applicable laws already exist in the way of unfair discrimination is prohibited, rates must be actuarially sound, data points must be correlated to risk, and some data elements are prohibited regardless of predictive value. Now, one might ask, and many do in the policymaking space, what about biased humans? What about biased data? Well, again, there are already laws in place for actuarial soundness, and if the conduct is illegal for a human, it's also illegal if AI is involved. I had one more slide in there, but it was just my contact information. So in wrapping up, introducing new regulatory standards or guidance applicable to AI with standards like bias testing is not only unnecessary given existing law, but creates dual and conflicting standards with that existing law and ultimately threatens the industry's risk-based foundation and largely prevents insurers from leveraging the tech that does have some demonstrable policyholder benefit and benefit to address a lot of the pressures facing the industry today. So thank you so much for your time, and I'm happy to take questions whenever it makes most sense.
Yeah, and that'll be at the end, just like with all other panels. Next, we have Mr. Wayne Turner.
Good afternoon. My name is Wayne Turner. I'm a senior attorney with the National Health Law Program. Just really glad to be here. For those of you who aren't familiar with the National Health Law Program, we've been around for over 50 years, focusing on healthcare for low-income and underserved individuals. A lot of our work is in the Medicaid space, but I have, for the past 6 years, served as a consumer representative to the National Association of Insurance Commissioners. And so it's that work and the work of the NAIC consumer reps who work on healthcare issues that I'm going to be focusing on today. So the health reps, we work together at the NAIC. We figure there's safety in numbers. And so we teamed up last year to do a report to focusing on the use of AI in health insurance, specifically looking at prior authorization. So with funding from the Robert Wood Johnson Foundation, we contracted with some researchers at the University of Chicago, and we did a pretty broad inquiry looking at AI in prior auth and other kinds of utilization management. So that consisted of a literature review, some key informant interviews, talking with not only consumer advocates, academics, providers, and also payers and regulators, just to get a sense of what the landscape is. And then with that, we synthesized it in the form of a report, which is linked here, and you all will have available to you. So we shared this with the NAIC last year, and really saw this as a way to help inform the ongoing work at the NAIC, particularly at the big data and AI working group that has been working on and will soon be releasing their really important survey on the use of AI in health insurance. So with our report, just a couple of the key highlights. I mean, there was certainly a recognition among the broad group of stakeholders that there are benefits, and we recognize that AI systems allow people to get healthcare decisions faster, and that's a good thing, but also quite a few concerns. And so that's what I'm going to be really focusing on and kind of highlighting for you all right now. So, so I'm going to start with just recognizing the limitations, right? When we're talking about AI systems that are used for prior authorization systems, the efficiencies that come from AI systems, of course, are the speed, getting decisions very quickly. But I mean, it uses a cookie-cutter approach, and one size fits all doesn't work with patients because people are very different. Healthcare conditions manifest themselves in people differently, and so that's why it's so important to have human oversight over these AI decisions. Because remember, these tools are really overruling the healthcare prescriptions, the decisions that are made by the providers, the people who are directly working with the patients. And so we've seen a number of efforts, including California, that tries to bring humans back into that oversight when a prior authorization request is denied. And that's an important important piece of the kind of protections which we advocate for. But it's almost like playing whack-a-mole, right? Because there are certainly incentives being provided to do kind of like mass approvals of the so-called impartial reviewers. So there's more work to be done on here. The other thing I really want to focus on too is when AI is being used for things like prior authorization. For people who have things like chronic conditions, who have treatment regimens that work for them, that they know are effective, they shouldn't have to go through the kind of the prior authorization reviews over and over again. A great example of that is with HIV treatment, right? When you find an HIV drug combination that works for you, you shouldn't have to try and fail if you switch plans or if you switch plans within a carrier. So we really advocate for the ability for consumers to kind of raise their hands to say, hey, this treatment works for me, my provider has already agreed with this, I shouldn't have to go through these prior auth kind of computer systems to get the denials and challenge them. The other thing I really also want to highlight is, people who are accessing healthcare are sometimes accessing that healthcare facing a health crisis, right? They are facing a health crisis. Their kid is facing a health crisis, and so being able to kind of circumvent the computer systems to get a real life determination by a human being is really important because it's really a race against time. So that's why we think it's so important to have these kind of like off ramps built into the systems so that again people can kind of get off the AI track. So one of the key issues that did emerge from the discussions with stakeholders and then work that my own organization has done over the years is on just the need for a transparency and the role of appeals, right? And so we all know that very few healthcare consumers actually appeal when they get care denials. Why is that? Well, because it's hard. People don't understand what the appeal process is. And unfortunately, our system is really built upon the complaints process, right? Really putting the burden on consumers to kind of fight back against wrongful or unlawful denials of care. So that's why we think it's really important when we build these systems and build regulatory frameworks governing these systems that we built in on the front end the kind of consumer protections. But one of the key pieces to highlight for you all is the need for these coverage decisions to be supported by up-to-date clinical standards, right? And so we want those clinical standards to be current. We want to make sure that the AI tools are using the standards correctly, and we want to make sure that the standards themselves are not outdated. And so that's why it's so important when people get denials of care, they have the reasons for that denial, the basis for that denial. Now in the Medicaid program, we have really strong due process protections that requires the Medicaid program to provide explanations of denials of care as well as how to appeal those. So my organization actually litigated the issue in the Medicaid program because under the federal law, there's a requirement that Medicaid coverage decisions be based upon ascertainable standards. So this was an instance where there is a third-party entity that developed a tool for level of care assessments for children with special health care needs. And so the third-party entity said, we're not going to divulge what criteria we use. Why? Because it's a trade secret. And the court said no in the Medicaid program because it must be, coverage must be based upon ascertainable standards. In this case, the litigants were able to access what those standards were. So it's really looking inside the black box to know what is the basis for these coverage determinations. Now that's tracing that accountability because it's a third-party entity that contracts with a managed care company that contracts with a Medicaid agency. And so that was a real challenge, but as the provider groups acknowledged in our survey, that being able to trace that level of accountability was really important particularly for appeals. Now, I think that the whole issue of accountability is, again, a challenge, and a challenge that's coming up at the NAIC deliberations on this, because, of course, insurance regulators regulate insurance companies. And so when these tools are being offered by these third-party entities, these kind of vendors or third parties, I think insurance regulators and U.S. state legislators are really struggling with how do we reach in, how do we regulate those product lines? But, keep in mind that insurance insurers cannot subcontract away their obligations under law. And we have federal non-discrimination laws that apply, including Section 504, Section 1557. But the news outlet ProPublica has done really a marvelous series on prior authorization generally, but focusing specifically on the use of prior authorization in AI, and did a profile of an AI company that was able to dial up or dial down the approvals for prescription drug requests for prior authorization. So again, it's this accountability measure, which is an ongoing challenge. Again, in the Medicaid program, we have a single state agency requirement. But I think that, and so so it was actually the state Medicaid agency that was on the hook for the trade secrets that were being provided by a vendor through the subcontracts with the agency. And so again, accountability is an ongoing issue, but an important issue when we're trying to protect consumers from denials of care. So when we think more broadly about AI governance issues, and I think we've heard this, and it's something I really think it's important to underscore, is the need for testing. And so having robust testing of these AI products before they're launched is, of course, important. But it's not a set it and forget it approach. We advocate for ongoing testing, so monitoring these systems as they're being implemented, and then examining the outcomes. And so, are these systems performing as anticipated? Are the biases emerging through kind of outcomes data? And having mechanisms in place that require testing again at all stages of the life cycle of the AI tool are an important kind of regulatory hook that you all can help put in place. And this was a point actually that the health plan executive agreed with, and so reflected in our report, recognizing that good governance requires companies to be aware of their models, but to have regular assessments to ensure those models continue to behave appropriately. I'm just going to touch a little bit upon some of the state laws, and then and hopefully we'll get to some of these in Q&A. But of course, Colorado is a state that we're keeping an eye on. Back in 2021, Colorado passed a non-discrimination in the use of AI in health insurance law. So of particular interest, because they are kind of furthest along in terms of the regulatory framework, in terms of implementing that law. Colorado came back with a new law, kind of the broader protections, and I think going after that kind of like third-party accountability by focusing on the developers of AI systems, not just the end users, meaning the insurers or maybe the state Medicaid agencies. So an important model to look at. Of course, California has been looked at quite a bit. That's requiring that a licensed physician with a specialty in that clinical area be there to make those reviews of prior authorization denials, again, to review the actions when the robot denies you care. And so, an important piece, became effective in January of this year. So we're still watching for California's implementation. And then finally, Utah, of course, different kind of framework that they're using in terms of a liability-based model, disclosures. The last thing I'm going to say about the state laws and the state kind of experimentation, I think some of the most interesting and important work that's happening in terms of reining in some of the abuses of AI, particularly in the area of health insurance. I mean, that's something that states are really leading the way on, right? And so, kudos to you. We're not always going to get it right, and but we're figuring this out. But I think it's really important that states have the opportunity again to kind of like test these models, to implement them. One of the big concerns that I have is whether federal preemption might step in and stifle the innovation that's happening in states. Innovation is often talked about in terms of allowing AI companies kind of free, unregulated reign to do what they want to do. And it's like, no, we have to make sure that consumers are protected, particularly healthcare consumers who are often experiencing the bad end of these AI systems. And so to the extent that innovation in terms of regulatory frameworks, monitoring and implementation and accountability measures, that's really important. The states are leading the way on that, and just really hope that that continues. So with that, I'm going to be quiet and pass it on to, do you want to go next? All right, so I'll pass it on, but thank you.
I guess Mr. Kokenberger was slated to go next. If he
What's
doesn't,
that?
I said, well, you were slated to go next. If you don't,
It's, what would you like? I mean,
if
we
you
just
don't
had
mind deferring to her, it's no.
that's, because we just had a presentation on health, and that's what, so it makes
Okay,
sense.
okay, makes sense. Okay. So Ms. McDowell, why don't you proceed?
Sure. Hi, everyone. Good afternoon. My name is Julia McDowell. I lead the AI Center of Excellence for Highmark Health. In this role, I have the privilege of overseeing where and how we deploy artificial intelligence to support the people that we serve. I also am responsible for change management. We've heard quite a bit about that this morning in the afternoon rather, and the important role that that plays, and our responsible AI program, including policy and governance. And so I'm here to share a bit more about all of that with you here. For awareness, my background, I have over 20 years of experience in human capital. I'm not a technologist by trade. The past 10 years of my career has been focused really on helping our executives determine ways that they can transform their business to achieve their targeted outcomes through people. And so I believe that when it comes to artificial intelligence, taking it from a people-first perspective is incredibly important, and I'm very excited to talk to you about that here today. So for those who are not aware or familiar, Highmark Health is a blended health experience or health company. We have a Blue Cross Blue Shield insurance plan that supports over 7 million lives across all insurance segments: commercial, Medicare, and Medicaid. We are based in Pennsylvania, Delaware, New York, and West Virginia. We also have national accounts, several national accounts across the United States. Our provider system, the Allegheny Health Network, is comprised of 14 hospitals in western Pennsylvania and southwestern New York. And we also, through the Allegheny Health Network, partner with over 3,000 providers in our provider network. We have a national presence through our dental insurance business, United Concordia, and our stop-loss business, HM Insurance Group. And we have a unique part of our business called Engine. They're a technology company that provides technology solutions to other insurers across the country. Our mission is to create remarkable health experiences, freeing people to be their best. And frankly, for us to achieve that mission, it requires us to harness the power of artificial intelligence. AI, we believe it helps us to unlock 3 really important capabilities that are lacking in the health insurance or healthcare industry at large today. 1 is a satisfying experience for the people we serve. 2 would be the better health outcomes. And last but not least is affordability. How many of you have gone to a doctor just to have them sit there and type on a computer the entire time you're talking? How many of you have received denial for care or a bill that you cannot understand? These are problems that are plaguing our industry, as Wayne had just spoken about. And again, for us to change that experience and improve the outcomes, we have to use this technology. For us at Highmark Health, we have a few beliefs when it comes to artificial intelligence. First, we believe that AI can revolutionize healthcare, but only through responsible development and deployment. We believe in prioritizing ethical considerations and promoting fairness in all AI applications. We believe in transparency and earning the trust of the people we serve. We believe in data security and privacy. Those are 2 fundamentals. And we believe in empowering humans with artificial intelligence. We believe in keeping people at the center of healthcare. Our providers are relying on this, particularly those states who may have a very rural representation. Access to care is a struggle, and these rural hospital systems are struggling to stay afloat. And so our artificial intelligence capabilities can help them and play a very key role in helping their survival and, again, patient access. Again, we're also seeing our patients struggle with finding the quality care when and where they need it most. I don't know about you, but it took me about 6 months to get into a dermatologist recently. And so again, access to care is a big problem. At Highmark Health, we have been using artificial intelligence for years, and so I wanted to give you a few examples to build upon some of the framework that Lindsay shared earlier, as well as what Wayne had also spoken to. At Highmark Health, we have a member listening system that has been in production, not testing, but in production since 2018. This member listening system is a form of machine learning that uses claims data and a bunch of other data points from our members to predict who might encounter a detrimental situation that will result in a high-cost claim. What we want to do is proactively reach out to those members and engage with them to put them in the programs that will help them to navigate their care optimally. It may mean providing them with resources that will help with social determinants of health. It may mean a nurse concierge helping them find the access when and where they need it, et cetera. That member listening system is a critical component to our business and, again, to our members achieving their healthiest lives. We are also reimagining our contact center, which is listed here on the screen. Right now, if you were to call into any of the contact centers across Highmark Health, maybe not right now, maybe about a year ago, you would have experienced lengthy delays. That member services representative putting you on hold while they sift through hundreds of pages of information, looking across 8 different systems just to figure out who you are and why you're calling. And oh, by the way, they won't have insight if you went onto the website and tried to chat. Those two things are not connected. And so imagine the member gets frustrated, they're on the phone for a long period of time, and they just want a simple answer. Our contact center of the future uses AI to kind of thread across all of those different interaction types and provide the member services representative information about you, the member, before you even engage with that member services representative. That allows that member service representative to really be present in making sure that they know who you are and they're meeting your needs. By the way, those member services representatives are required to take notes on those calls and upload those notes into a record. Those notes are inconsistent, again, hard to read, hard to sift through. Artificial intelligence today now can listen in on that call, transcribe the notes, allow the member services representative the opportunity to preview those notes, and then just click a button and it goes into the member record, allowing that member services representative to be there with you, the member, be fully present and create that experience that we have been striving for. Another example would be on the provider side at the Allegheny Health Network. As I had mentioned before, all of us have gone to the doctor and had that clinician sit there and type on the computer the entire time you're trying to talk to them about your issues. Ambient listening helps solve this problem. The doctor turns on their phone. You walk in as a patient, and they say, hey, can I record this conversation? You have the opportunity through consent to say yes or no. Should you say yes, that interaction is now being transcribed. The technology can differentiate between you as the patient and your doctor. It can also differentiate between you as a patient and a loved one who might be in the room with you. It can differentiate between the clinical conversation that you're having and if you happen to tell your doctor, hey, I had a great golf game yesterday. It pretends like it doesn't hear that. It knows what it needs to focus on. At the end of that conversation, the technology produces a note that the doctor then reviews for accuracy, because at the end of the day, it's up to the doctor to make sure that everything is accurate and appropriate. And by the click of a button, those notes then go into the EMR. That technology is in production today, supporting thousands of clinicians at the Allegheny Health Network, and we're seeing direct correlations between the use of that and clinician sentiment, clinician happiness. It's reducing pajama time. It's also improving quality because our doctors can focus on the patients, and our physician burnout is significantly reduced. So those are two very important outcomes, and there are many more. Last but not least, at Highmark, like many other companies, we have introduced a chat application. We call it Sidekick. Only Sidekick for us is not your standard chat application. It is truly a personalized portal to artificial intelligence. All 50,000 team members can access Sidekick with single sign-on. It's on their desktop. And they can interact with this technology in a totally safe and secure environment, zero data leakage. And because of the way that that was structured, we're seeing tremendous outcomes in terms of AI innovation, building AI literacy, and building trust, frankly, with this technology. And so I wanted to share those with you to inspire you and recognize that this technology, again, has a tremendous impact on the industry, and we are just getting started. So I'm thrilled to see where this goes over the next 2 to 5 years. At the core, though, it's really important, as I mentioned previously, that we do this through a very structured approach to ensure that we have the right guardrails in place for not only those who are developing, but also using the tools. Our responsible AI framework, which you see here on the screen, is something we're very proud of. It's been in place since 2021 for us. We've been on the national stage talking about this and have been advising other organizations on the best way to implement a similar structure for themselves. I frankly believe that as you're thinking about model law, this could also serve as a framework for you. On the far left, you'll see policy. Policy is really important because it gives us the guardrails, again, for expectations for AI use. Within our policy, we require a human at the helm. We do not allow artificial intelligence to make clinical decisions. And we ensure that all of our team members have the access to the right tools through a zero data leakage requirement. Next on the list is governance. And when I say governance, I'm thinking about it from a bigger lens, many layers. We have all of our business areas involved in some way, shape, or form. We have governance for where and how we prioritize our investments in artificial intelligence, and we also have governance that would be assessing the use cases anywhere that we want to employ artificial intelligence before it goes into production. In that scenario, we have a very robust risk framework where every single use case is assessed across a variety of dimensions. Here I want to reinforce that because of our society, because of data, because we are humans, it is not humanly possible to remove bias from AI. And so what we need to pay attention to and what we pay attention to is adverse bias. So just keep that in mind because I think as we talk about where support is needed, words matter a lot. The third dimension of our...
Ms. McDowell, if I could, in the interest of time, if I could ask you to sum up.
One more, yep. So we have culture, which focuses on training. All of our use of artificial intelligence goes into our annual regulatory training. And then partnerships. At Highmark, we rely on partnerships like this. We have an affiliation with Carnegie Mellon and others to keep a pulse on the environment, both in terms of innovation as well as regulations. Where I would kindly ask for help, and it's consistent with some of my panelists here, would be consistency in definitions. What is artificial intelligence? As Lindsay had mentioned, there are a variety of different types of artificial intelligence. Let's get clear on what we mean when we say that in the regulations. And I would also get really clear on when we're defining use in certain areas, what we mean by that. I would also, again, focus on regulating use and not tools. I loved that knife example. That was a great one that I might borrow. And I would also encourage us to focus on probabilistic and therefore AI and not start to soak in the deterministic workflows and automation that we have been employing, again, for years. Last but not least, what we haven't talked about on this panel yet that I will introduce to you is the consideration of the various roles that different companies play in artificial intelligence. You have technology companies that are developing models, you have deployers of models, and then you have distributors of models. And I would argue that insurers were often deployers of models, and so each of those roles requires a different type of regulation. And so with that, I will wrap up, and again, thank you for your time.
Thank you. And finally, we'll have Mr. Peter Kokenberger.
Thank you. I don't know if I get to the slides or, let's see. What's that? Oh, no. Okay. Mine is the one with all the text and very few graphics, unfortunately. Okay. Okay, as long as everyone can hear me,
Yep.
it's not usually a problem. First, thank Peter Kotzenberger. For 18 years, I was a professor and executive director of the University of Connecticut's Law School's Insurance Law Center and helped run its LLM program in insurance law. In the last 3 years, I've been a visiting professor at Southern University and Southern University Law Center in Baton Rouge. I also thank you for inviting me, and it's a pleasure to be here. I've had also the pleasure of speaking with or working on several, being on several NAMIC events before, and I always learn a lot, so thank you. I also think that it's also good that I went last, I think, in part, not because I'm going to now have that last word to argue with everyone I don't agree with, although that's always tempting. I'm not going to do that because we had 4 very good presentations, and I appreciate that. I want to go back a little more to some of the basics of insurance that we all know, but which really deploy differently, or can be, in AI. Effective consumer protection enhances and is not a necessary component of using AI. That is maybe a good title heading for a brief. It's a clunky title. I realize that. But it summarizes, I think, pretty well at least what my views are. I did not create this graphic. I wish I had. But we're not at a pivotal point. We were at a pivotal point 5 years ago. We'll be at a pivotal point in another 5 years, if not before. AI changes that rapidly, and the need for legislation and regulation to keep up also changes. But it can be, if not a gift from God, it can certainly be a change insurance and make it more transparent and more valuable to consumers, insurance consumers. It can also do the opposite. We all know this. More than any industry or product I can think of, trust is required. Because all you get when you have a insurance policy, I'm going to pay you premiums, maybe all up front or over the year or whatever, and I get a piece of paper, a contract. But I don't get my car now, my refrigerator now, my product now. I don't even want to ever get it because who wants a claim? But when I do have a claim, it'll be probably long after premiums are paid, and we know claims can come up months, years, and yes, multiple decades after the policy was written. And if you don't have trust that after you've paid your money, that the insurance company will then honor their promise, then you don't have an effective insurance market. There's a couple of reasons. One is, unlike other breach of contracts, if you have a covered claim that the insurance company doesn't cover, you don't have any effective remedy. You can't go to another company and say, would you please insure this loss that occurred 2 months ago? That's not going to work. You can't get a replacement product. And typical remedies such as, okay, we breached the contract, here are your premiums back, is virtually irrelevant to the scope of damages that you likely have faced with the claim. So insurance markets, insurers must have the financial resources to pay, as well as the willingness to do so, which is all what insurance regulation is about and has been. But now, what is particularly challenged, lack of, and this is not a criticism of everyone, I certainly don't understand them, but the use of AI is increasingly not only common, but ubiquitous in insurance, and yet how the models are developed and employed is not well understood, nor we'd expect it, and regulators, insurance producers, agents are also challenged and have far less ability, I would argue, I think, to explain to a consumer, why did my auto rates go up? Well, it's a complicated thing. Here's the use of social media and unstructured data that really affected 2% of this. We don't have those discussions. And it's not easy to say this anymore, and it's not going to get easier. So this leaves consumers on uncertain rights, potential for less protection, and in part because one of the big things about insurance, one of its public benefits is risk-based pricing is a tool, not a goal of regulation. But the fact is, if I know why my premium is going to be higher or lower, I can take actions, some actions, to do something about it. I can be safer. I can not get as many tickets. The more what's often called unstructured data that's used, then the less correlation there is likely to be with what I can do as an insurance consumer to improve, to get the benefits which derive to society, the safety benefits of, or the enhancements of, I know or I have information on how I can drive, how I can improve my risk. And the NAIC has done a number of useful surveys, and they've completed auto, home, and life. I think they're close to completing, but Wayne would know, the health study. But the point of this is that a large majority of insurers are either using it now or intend to use it in the future or considering them, which who knows what that means. But I think if we look at if we do check by insurance premium in terms of who's using them, and I should have done that in advance, but I didn't, then we're probably going to get a very high percentage. Roughly 50% or so, a little less, rely, on independent third-party vendors, modelers. The organizations are represented here: VeriRisk, LexisNexis. And much of the data used is not, you can call it non-traditional, unstructured consumer data that otherwise was previously not available, irrelevant likely if it was, because how do you model it? Well, that's changed. Credit scoring, by the way, which regardless of the debate, I think it's pretty clear that it's accurate. Why it's accurate or has some accuracy is a different matter. But that's the early stages of what we're talking about now. Why should how I handle my mortgage and credit card loans affect how my insurance rates for how I drive? It's much more difficult now. And what laws protect us? Well, this is now where it comes down to all of you. Most of this, we don't know if it's protected or subject to traditional consumer protection laws, privacy laws. It may be, it may not. The Federal Fair Credit Reporting Act, which has been around for almost 50 years or more, it provides some very important protections, limited but important, but much of this data likely, and it's always going to be likely until we know, likely falls outside of that. It's not, social media habits, shopping habits are not part of the Fair Credit Reporting Act. And even when the Fair Credit Reporting Act applies, a model is complying with them. And I'm not assuming that they are or not, but we need to know. Regulators need to know, you need to know, as well as insurance consumers. Because we know, we've all heard many presentations, thankfully not as much recently, from vendors or innovators that talk about all the wonderful things they can do for insurance, including one said, we can teach you how to use risk-based pricing, which was somewhat surprising to me that they didn't do their research. But the point is, little is ever said about how are they protecting consumers. And a lot of this, not all of it, can be resolved if you give the regulators the statutory tools to be able to address 21st century risks, 2025 risks, which will be different than 2035, no doubt, and the budget, that's the hard part, to do so. And we have some detriments, potential detriments. Price optimization, which was very well known a number of years ago. As far as I know, it's still going on, although it was temporarily tamped down. But the loyalty penalty, where your premium in part is based on how much can we raise your premium before you, Peter, are likely to just get disgusted and go shop around? That's not a risk characterization. Claim optimization, I have no idea if this is going on. What I do know, and I've actually been talking to NAIC or presentations for over 12 years, because is the technology and the predictive models absolutely exist. But insurance contract is not a contract like to buy a car, to buy an appliance. Insurers have the obligation to pay, and they'll tell you this, and they should, and they do, pay a covered claim to its full value up to the policy limits. Being able to optimize, well, Peter, we think the claim is worth $850, $8,500. Peter, from everything we know about him, he wants the money now, he's impatient, he'll settle for $7. So we'll stick at $7. That, if you can prove it, and that's a big if, but if you can prove it, if the ability exists, then that's a violation. I'm not entitled to, insurance policies, right? A claim is not an opportunity to re-argue what the policy means. It's to get the benefits owed.
Mr. Kotchenberger,
Yeah.
for the interest of time, if you could please sum
Yeah.
up.
So, clear and transparent disclosure requirements are important. They will not protect consumers alone. And this case, I always use this in class because what the case says, and you'll have everyone access, are about policies prepared by experts, highly technical, complicated, and voluminous, and consumers don't read them. This was in 1910. All the evidence today simply, and 13 pages may be voluminous then, but it would be a pretty short policy now. It's only gotten more voluminous, more complicated, and more technical. And none of that has to do with any evil motive. And here's the idea of caveat emptor or freedom of contract. Look, if it's disclosed in the contract, you have to enforce it. That's great, but it hasn't been considered adequate consumer protection since the 1960s and 70s, and certainly not in insurance. I always love this, but in Great Britain, the online games provider, on April 1st, had all their contracts read and buried in a print that if you sign this and buy the game, you have agreed to sell us your souls, which we may sell to the devil if we desire to. Along with, you get £5 if you notice this and come back. Now, this is the kind of thing that today would have swamped, immediately everyone would be talking about this. But even then, 80% of the people just signed it. Consumers don't read the contracts. And you can have all the small print, clear disclosures you want. They're not much good because very, very few people will read them. What you need is substantive laws. And the NAIC surveys show that when asked what protection, what knowledge, what transparency do you provide to insurers, well, the answer is the minimum required by law. That's not an evil thing, a bad thing. That's what we'd expect a for-profit industry to do. But it's okay and profitable because there'll be adequate regulations and statutes to rein it in. This doesn't have to be the future. Oh, this was created by ChatGPT a couple of days ago. This doesn't have to be the future, but it is the future where we're going to more now. And the last thing I'll say is the NAIC bulletin, well-intentioned, has some valuable protections or information on governments. The NAIC, since it adopted the insurance principles of AI, a very good document in 2020, has yet almost 5 years later, to provide a single substantive protection for consumers. It doesn't touch that. You guys can. Thank you. And I also want to thank you because in 2021, you passed this resolution on use of criminal history data. You're far advanced even now than NAIC. Thank you.
Thank you, and I'd like to thank each and every one of the panelists for their presentations and testimony. One of them did have to leave early in order to catch a flight, so it wasn't any disrespect to the members. We'll start off with questions. and I'll lead off. The first one is for Wayne Turner. Um, Are you able to provide us with the methodology that was used for the AI survey you referenced? And do you know how many health plans that were surveyed?
Sure. Actually, we do discuss the methodology that was provided in the survey itself. We didn't survey plans. We had conducted interviews with, I think, 2 of each of the stakeholder groups. And so two plan executives, 2 sets of regulators, 2 consumer reps, two academics, and then 2 technical experts. And so I think the NAIC, the Big Data and Artificial Intelligence survey that's due out, it says April, so so it'll be due out maybe Monday. But that is a much more comprehensive survey where I believe that they actually had very detailed questions that were distributed to some 16 issuers across the country in different states. And so that will be a much more comprehensive look at how insurers are using AI. Again, our report as kind of like a broader landscape, again, getting those inputs from the many stakeholders and kind of like players, including consumer groups. So
I'll just check with the member. Are there any questions for this panel? We have Senator Bjorkman from, is that Alabama? No question? Okay. So if there are none, I'll continue. I believe it was Ms. Korkowski, you referenced some states in your presentation. Are you able to point to any state laws relating to AI and insurance that you think have taken a good or bad approach?
I don't think any of the only state that has taken an insurance specific approach, and it's not specific to AI, it's specific to external consumer data and information sources, has been Colorado, and that's Senate Bill 21-169. Now, in terms of a good or a bad approach, my critique to all of the regulatory bulletins that are out there and Colorado's law is that they're not viewing AI through the lens of it being a tool, and that's largely what's missing from the policymaking space today.
Okay, and then how about, I guess it's for whoever is appropriate, do you ultimately think that there'll be a federal policy framework related to AI and insurance?
I can start. We monitor the federal space and federal activity as it relates to AI and insurance. What we've seen with the new administration is a step back from the realm of being more over-regulated or a heavy regulatory hand to allow for AI to prosper and for the U.S. to become more competitive. What that has created is a very active state environment. In terms of state bills that we've been tracking foundational AI bills that mirror Colorado 24-205 in various states. But I will caution with those foundational AI bills, it is a one-size-fits-all approach that doesn't necessarily fit all. Those, again, do not view AI through the lens of it being a tool, and it attempts to treat all models of AI equally, as well as all industries equally. And use case and context is going to be very important as we continue along in this journey with AI advancement.
Actually, I can also address that. So we've actually seen some federal action here, and so the Department of Health and Human Services finalized the interoperability rule, and so what that does is it establishes some timelines for AI processes for things like prior authorization determinations, standard expedited decision making, as well as some data reporting requirements. The really kind of interesting thing about that rule is that it applies across product lines, and so Medicaid managed care plans, qualified health plans that are sold through the ACA marketplaces, as well as Medicare Advantage plans, basic health plans. And so there are some benefits, obviously, with having that kind of uniformity across product lines. One of the limitations with that rule, though, is that it does not apply to prescription drugs. And so that is had been on the horizon. It's unclear whether the new administration will pursue this. But that's the kind of efficiencies that are helpful. I will come back to my other point, though, that I think that you as state legislators, you really are closest to the ground for your constituents. And so when it comes to insurance regulation, of course, traditionally in the purview of states, it's so important to keep in mind that consumers are not on an equal footing with insurers, right? That is a disproportionality in that relationship. It's very David and Goliath. And so that's why it's so important, as you are considering these regulatory protections, to really center the consumer experiences. My concern is that the new administration in particular may go off in a direction of, again, encouraging innovation, which again is not a bad thing, but I think the innovation that you all are engaging with in terms of putting some regulatory protections and frameworks in place is really important and helpful for us as these things play out.
Thank you. I think, as a number of people have said, it's virtually impossible, at least I can't do it, to predict where the administration is going to go on these issues. There's been talk about a uniform federal privacy standard. I don't know where that stands. But what we do have a couple examples we can draw on, and that is when Congress, the federal government, has included insurance in other financial services legislation. Dodd-Frank comes to mind, perhaps, or just general privacy legislation. It doesn't go well. And one of the best arguments, I think, for state regulation of insurance, and we're the only country that does it this way, is that we can do it better. We are more effective, more nimble. Having effective laws here is the best way I can think of to stave off whatever kind of federal legislation, and some of it, I don't mean by definition it's bad, whatever federal legislation that may come in that may not recognize what insurance is and what insurance companies and consumers and regulators need.
Okay, thank you. I do have some further questions, but in the interest of time, I'm going to close here. I want to thank each and every one of you for coming in today.